But let's get talking about one particular company which has managed to outperform all the way since it listed in December of 2021. Tega Industries is the one that I'm talking about. Its issue price or its listing price was around 453 odd rupees. Since then, the stock has rallied around 162 odd percent. From its 52-week low of around 624 odd rupees, it's rallied around 90 odd percent. So good going for Tega Industries. Let's get in the management to talk about what the business is looking like. They have a growth guidance of around 15% for FY24 and is expected to benefit from the integration of the McNally acquisition. It is also finalizing its expansion plans for the Latin American markets. To understand more on the growth strategy, we have Mehul Mohanka, the MD of the company and the CEO, joining in. Mr. Mohanka, thanks very much for taking the time out. Well, I just wanted to start by, talking about this order which you had received from one of the largest copper mines in Europe. It was received in August of 2023, which was worth around 685 odd crores. We do understand that you've started work and billing has begun from the start of this year as well. How is it progressing and what is the run rate like?
Morning. Thank you for having me on the show. Yes, the revenues from that contract have begun as of January of 24. And will continue on for the next 5 years and extendable by another year. So the revenue guidance remains intact in terms of the growth of 15% that CAGR that we mentioned earlier on, and the new contract is going to significantly add onto this going forward in the next few years.
Mr. Mohanka, good morning. Thank you so much for joining in. You had previously mentioned when we spoke to you during the Red Sea crisis that your revenue in the third quarter was impacted by around 45 to 50 crores. What's the situation on ground currently, and do you see that impact either minimizing or reversing altogether as we end the March quarter?
So, we continue to witness the challenges in the Red Sea crisis. As I mentioned earlier, the shipping timelines have extended by another 3 weeks on top of our regular shipping timelines. And it's not, we're not seeing any easing out of the crisis yet, but we're hopeful that in time to come, we will see that situation improve. But as we speak, I think we continue to see those challenges play out as of now.
Okay. So we are assuming that this new order, which you received in August of 2023, is the key reason for you to achieve that 15% growth for FY24. That would imply around 400 crores in terms of revenue for Q4. Is that a fair assumption?
No, actually not, because it's a revenue that's going to accrue on a monthly basis. And as of now, we're going to see only 3 months, that is January through March, come in the Q4. So the 15% growth that we've been talking about is aside from this contract, which is just going to see the impact in Q4. We'll see the full impact of it in the next financial year.
All right, but we're assuming that your revenue run rate on a quarterly basis is probably increasing from that 350 to 370 mark that you were doing previously. You're probably augmented to around 400 odd crores, and is that probably going to be a run rate that we could see sustain into FY25 on a quarterly basis for the company?
Yes, that would be accurate to a large extent, yes.
Right. Mr. Mohanka, what is the situation on ground for the copper mining industry? If you can tell us that, because mine production for copper has grown only 1% in 2023, and because of some issues in the key markets, like Chile, Peru, Panama. What's the situation on ground currently, considering the rising adoption of renewables, electric vehicles? So there will be demand. So what's the situation right now?
Yes, so from what we speak with our customers, which are predominantly copper and gold mining companies, the demand still seems robust. We haven't seen any pressure on cost of mining of these two metals. Copper, we see to have a strong demand going forward, particularly for the industries that you mentioned, driven by EV and consumer durables going forward. There has been some news around some challenges in Chile, but is beginning to improve and ease out. So we're not seeing any challenges in the copper segment going forward. And as we mentioned, we are on the consumable side. It's an OPEX spend for us. So as long as mines continue to operate, our business is going to remain attractive going forward.
Okay. There's been a significant fall in your margins, say compared to Q4 of FY23, where your margins were 26% almost, and in Q3 it was around 23 odd percent. Q3 of FY24 you were at 16 odd percent. So can you give us a sense in terms of what the margin pressures are and what is a sustainable run rate?
So as we mentioned, our margins are going to remain at about 21 to 22% EBITDA on a consolidated basis. I mean, some of the impact you saw in Q4 of FY23 had to do with the merger or integration of McNally, Tega McNally into Tega. And as an effect of consolidation, we got the best period of McNally consolidating into the Q4 of FY23. And that's why you see a bit of a blip when it comes to Q4 to Q4 comparison between 23 and 2024 going forward. Sorry, please go ahead.
When you recover back to those levels of 21%?
You would see that hopefully by the end of the year. We would end the year strong.
So in Q4, you expect that figure to be around 21, 22%?
Yeah, consolidated, we would, we're remaining with our guidance of 21 to 22% for the year.
Right. Mr. Mohanka, you had launched a disruptive steel lining product called Dynaprime in 2018, and a brokerage note also mentions that you're focusing on a vast $900 million market with very limited competition. Now, in FY23, your sales from Dynaprime was around a quarter of your overall revenue, if I'm not wrong. What do you expect that to be in Q4 and going into FY25? Do you see that share expanding?
So Dynaprime is an offering for us, which is disruptive in terms of the steel lining market. And it's been tracking quite well for us over the last 4 years. And we continue to see a strong momentum going into the next few years. So we continuously being able to claw back some market share as we continue to grow. And I think the revenue would contribute about close to, I would say about 20 to 22% CAGR on a going forward basis on Dynaprime from current levels.
Okay, all right. You also mentioned that you have a new smart product which is currently under trial phase and the initial response from the customer is good. I'm assuming that's a different product that you're talking about, and what would the update be on this specifically?
Yeah, so that's part of our entire smart product offering. Okay. So we are conducting various field trials as of now, and the product was prototyped last year. So we're looking at commercializing that going forward into the next financial year. And
one final question. Offering. Yes, please go ahead, sir.
Sorry, so that's a different offering. These are just add-on features to our existing product lines.
All right, Mr. Mohanka, thank you so much for joining in and taking time out to talk about your company and the prospects going ahead. We wish you good luck for FY25 as well. That was the management of Tega Industries there talking about the plans and the products that are in the pipeline as well. The stock doing well for itself, closing in on the highest point of the day now, almost at 1200 rupees is Tega Industries. Time for a